Hello and welcome to the first episode of Cryptollennium. I'm your host, Luca Most, and we'll be going over some of the top stories in the cryptocurrency industry and Web3 today. It is November 8th, 2022, and quite a day in cryptocurrency history, might I say. So let's dig in, like and subscribe, and we'll start with our first story. Why is the market down? Well, I'm sure we've all woken up today to see that CZ Binance plans to acquire FTX over rumors of insolvency. Now, what does this mean for the rest of the market? Well, let's take a look. Crypto prices are falling as investors fear over FTX's solvency and the state of consumer funds send BTC and ETH price towards new lows. With Bitcoin, we actually did see a new low today of about 17,100 and a few dollars versus the low that we had seen for this year in June of about $17,500 or $600. At this point, one person briefed the fundraising blitz said what started as a $1 billion ask was looking more like a $5 to $6 billion by midday. What does this mean? Well, concerns over the FTX balance sheet caused the market to take a sharp turn downward after initially the Binance letter of intent for FTX brought the markets upward. And some people speculated whether that was caused by elections being today, but I think this had something to do with it as well. According to reporting, FTX was apparently seeking to raise $6 billion in financing to fill the gap in their balance sheet, putting the deal potentially in jeopardy. And so the fears of a bank run obviously spooked the market. In May, we saw Terra Luna, and Terra Luna brought down the market in a way that we hadn't seen since 2018, 2019. And I know some veterans do remember what I'm talking about. So analysts are drawing parallels between the current FTX bank run, the perceived large budget hole, and what happened to Terra Luna earlier this year. These fears are adding to investors' fears about the cryptocurrency industry at large. A few weeks ago, we saw a new low in traditional markets, and I think it was about time to see this low. And who knows? We might be in for some hurt for the next few weeks, but I believe this is the catalyst that we needed to see a potential bottom for this bear run. Now, as always, this is not financial advice, but let's continue. So, with this happening, there is a persistent threat of regulation, and I know Sam Bankman-Fried really, really liked and was an advocate for regulating cryptocurrency, to drive adoption. So this might have been the catalyst that he was looking for, although I don't know if he intended for it to be like this. And so scams and Ponzi's triggered liquidations and repeat blows to investor confidence. Bad news and events that compromise market liquidity tend to cause catastrophic outcomes due to the lack of regulation, the youth of the cryptocurrency industry, and the market being relatively small compared with equity markets. And this goes back to Luna, Celsius, Three Arrows Capital. We all know what happened there, and hopefully FTX is not following their footsteps. Now, what we can expect for the rest of 22 and 2023, according to this author, the factors impacting falling prices within the crypto market are driven by FTX's capital crunch, coupled with investors' fears from previous insolvencies. In the meantime, investors' appetite for risk is likely to remain muted, and potential crypto traders might consider waiting for signs that the U.S. inflation has peaked and for the regulatory environment to become more clear. Now, this is interesting because we know markets are forward-looking. And so the question is, how forward-looking are they? And are we going to see the Fed pivot in sometime early 2023 or mid-2023. I hope so. Now, other interesting news. I think this was announced possibly yesterday, and that would have been November 7th. But just to catch you up, if you missed this, U.S. feds seized $3.36 billion worth of Bitcoin linked to the Silk Road darknet market. U.S. Attorney Damian Williams announced on Monday that authorities had seized over 50,000 Bitcoins allegedly linked to the illegal online marketplace Silk Road. At the time of the seizure, digital currency was valued at around $3.36 billion. Authorities claim that Zhang stole Bitcoin from an illegal marketplace known as the Silk Road, an online drugstore that the FBI shut down in 2013. Ross Ulbricht launched the platform in 2011 to buy and sell illicit goods and services. Its founder was sentenced to life in prison, which he's serving. And I know we all know about the Silk Road. That's what gave Bitcoin its first reputation of being, for weapons, illegal drugs, so on and so forth. But that narrative can't stick with all the institutional backers coming along. And we'll get to that a little bit later. But the U.S. Attorney's Office for the Southern District of New York said that Zhang took advantage of the vulnerabilities in the Silk Road website. Tyler Hatcher, a special agent with the IRS, said that Zhang carried out a sophisticated scheme to steal digital currency from Silk Road. Now, this guy has some major diamond hands, and I'll tell you why. It's likely that he did this in 2012 or 2013, and he's just been holding his Bitcoins ever since. Now, according to the story, he was actually holding them in, I believe it was a tin can, but I don't know if that is actually a rumor. But he's a modest life from what I hear. And, hopefully we can learn something from the diamond-handedness, and we can move on from there. Now, going back to this morning's tweet with CZ Binance and the potential acquisition of FTX. So, crypto world is rocked as world's largest exchange rescues rival. New York Times published this today. Binance, the world's largest cryptocurrency exchange, said it had reached a deal to buy FTX amid fears the industry could enter another meltdown. Now, for those of you who hadn't seen CZ's original tweet from this morning, he tweeted out, "This afternoon, FTX asked for our help. There's a significant liquidity crunch. To protect users, we signed a non-binding LOI, letter of intent, intending to fully acquire FTX.com and help cover the liquidity crunch. We will be conducting a full DD, due diligence, in coming days." Now, I assume they're going to be doing some research to see if there was any fraudulent activity occurring with FTX and Alameda and their investments. An internal note to FTX employees: SBF Sam Bankman-Fried, the exchange's chief executive, apologized for not being communicative recently and said the company had experienced roughly $6 billion of net withdrawals over the previous 72 hours, compared with tens of millions of dollars in inflows and outflows on a typical day. Now, this is not a good sign, and clearly the industry, the community as a whole, has noticed that something is wrong. Otherwise, there wouldn't be $6 billion in net withdrawals. In a note which was obtained by the New York Times, Mr. Bankman-Fried added that he had made mistakes. "I'm sorry," he wrote, noting that most of the details of the transaction with Binance are still not hashed out. And with a deal this big, it's going to be weeks, hopefully days, but weeks most likely, until we know for sure what's going to happen. And you can bet your bottom dollar that FTX's native token, may not recover until we see some clarity in what's going to happen as this story unfolds. moving on, we had a few different members of the Web3 community with very many opinions on what's going on. But a good example and something that I liked was this one by Staro KG. Decentralization is a basic of the crypto industry. If Binance gets 100% market share and BNB's market cap exceeds Bitcoin's, the industry will fail and CZ will lose everything. Helping FTX recover from the current rumor is the best choice to CZ. Now, the reason I chose to share this on this introductory video for the Cryptollennium page is because a lot of rumors are going around that CZ Binance is more of a gangster, and he was waiting for a situation like this to make his move against a competitor. And prior to this tweet, I didn't have very many good ways of describing how that is inaccurate due to the fact that just Binance and FTX don't seem like real competitors. Yeah, FTX has some acquisitions and some big potential, but FTX is it more seems like a competitor for someone like crypto.com. I'm not sure if Binance has any competitors with their market cap and their 24-hour daily trading volume being so high compared to the next centralized exchange, which would be Coinbase. I believe they range between 60 to 70 billion within 24 hours. And as far as Coinbase goes and those exchanges, they're easily under $10 billion in 24-hour trading volume. So this is a good reason also as to why CZ most likely has good intentions, although it may seem like the smartest of strategic moves on his part. Another example of what happened this morning, Sam Bankman-Fried tweeted out himself a thread describing the current status of this potential acquisition. And again, for those of you who haven't caught up, we'll go into it briefly. So he tweeted, "Hey all, I have a few announcements to make. Things have come full circle and FTX's first and last investors are the same. We have come to an agreement on a strategic transaction with Binance for FTX.com. He continued by describing our teams are working on clearing out the withdrawal backlog as is, which is about $6 billion, I assume, or we saw in the previous article. This will clear out liquidity crunches. All assets will be covered one-to-one. This is one of the main reasons we've asked Binance to come in. It may take a bit to settle, etc. We apologize for that. But the important thing is that customers are protected. Yes, that is important. We all learned from Do Kwon. A huge thank you to CZ Binance and all of our supporters. This is a user-centric development that benefits the entire industry. CZ has done and will continue to do an incredible job of building out the global crypto ecosystem and creating a freer economic world. I know that there have been many rumors in the media of conflict between our two exchanges. However, Binance has shown time and time again they are committed to a more decentralized global community economy while working to improve industry relations with regulators. We are in the best of hands. Note that FTX US and Binance US are two separate companies and are not impacted by this. FTX US's withdrawals are and have been live. It is fully backed one-to-one and operating normally. I'm glad he mentioned this because I know we have a lot of US viewers, and a big point of concern. CZ tweeted out about 6 hours ago, following all the drama of today, 2 big lessons. And I believe everyone should learn and know these lessons well, because we don't need any more liquidity crunches, exchange crashes, decoupling of stablecoins or depegging, and further damage to an industry that is in its infantile stage. So he said, never use tokens you created as collateral. This can be brought back to Luna and many other examples. 2, don't borrow if you run a crypto business. Don't use capital efficiently, he said in quotes. Have a large reserve. Binance has never used BNB for collateral, and we have never taken on debt. Now, this is extremely important because it outlines just how disciplined their approach is when it comes to creating protection for their consumers. And I think CZ sets a tremendous example for the rest of the industry. In other news, Binance also proposes a proof of reserve pledge and gains support following this FTX crisis. Now, what this means is we should have transparency in the liquidity and what the exchange is actually taking on as far as debt. All crypto exchanges should do Merkle-free proof of reserves. And I believe they're referring to Angela Merkel, the Prime Minister of Germany. Banks run on fractional reserves. Crypto exchanges should not. Binance will start to do proof of reserves soon, full transparency. Now, for those of you who aren't up to speed on the US dollar, but ever since the 60s or 70s, or maybe even previous to that, the US dollar was no longer backed by gold reserves. And this is what created a cycle of debt within our economy that continues to grow. And this is the concept of fractional reserves, which in some cases could be deemed as fraud in plain sight. But we won't get into all of that. In other news, Martin Shkreli reassures Do Kwon about life in prison as they discuss FTX and Binance today. And I believe they were on a video call of some sort, and Shkreli, sometimes referred to as the pharma bro for his role in that industry before his conviction for securities fraud, had doubts the Binance FTX deal would work out. He said, I think the whole FTX's balance sheet shortfall is a lot bigger than people think, and I think there's a good chance Binance walks away. And I think that'd be terrible, Shkreli said. Kwon, whose Terra Labs issued the Terra stablecoin, as we all know, the depegging, known as Terra USD Classic, that collapsed catastrophically in May, had more confidence in the deal, saying, I'm assuming the sale price is at a reasonable discount to whatever the private funding round was. But if CZ steps in and makes users whole, there's no way why he, SBF, would be in any meaningful distress. He'll probably move on to something else. Now, I feel bad for Do Kwon in this situation because nobody came in and swooped down to help him in his case of insolvency. But that, correlated to arbitrage and a lot of big players. Maybe something that couldn't have been prevented. Shkreli, if you don't know, is goes by the pharma bro, but he used to be a pharmaceutical executive who drove up prices of life altering or what is the word? Life-saving drugs to such a height that he became the most hated individual in the United States for a while. He went to jail for securities fraud, Ponzi schemes, robbing Peter to pay Paul. Now is good friends with Do Kwon, and maybe Sam Bankman-Fried will join that trio and they'll become the Three Musketeers of insolvency. Now, in other news, more banks embrace cryptocurrency after trying to kill Bitcoin. Now, this was written today, and before we dig into this, it might be good to note that because the United States has seized about a total of 3.36, but now bringing their balance sheet up to 4 billion plus in Bitcoin holdings, the US government may look at Bitcoin in a different way than it did prior to this acquisition of stolen funds. And the reason for this is because now they benefit from the success of Bitcoin. Banks should only follow suit. And ironically, banks have been making the first move, and it took the US government, and they still haven't come around, but I'm sure they will, this long to embrace cryptocurrency. Now, when Satoshi Nakamoto launched Bitcoin in 2009, it did not seem like anything worth consideration. At first, Bitcoin remained relatively unknown, with limited interest in it. Yet, this was the fuel it needed to finally become the most popular currency with over 300 million users today. And for those of you who aren't aware, this 300 million users, this is where the internet was in the 90s. So if you can imagine just where we are, this is arguably just as or more important than the internet, as this allows users and the general population to protect themselves from fraudulency and big players who aim to bring their balance down for their own profit. Now, the reason people are saying banks are embracing cryptocurrency is because in the past years, we've seen more conventional banks change their stance on cryptocurrency. From trying to block it, they are now trying to embrace it. According to recent data, traditional banks including Wells Fargo, Deutsche Bank, Barclays, JP Morgan, Citigroup, UBS, and Credit Suisse have started embracing cryptocurrency. And aside from this list, BlackRock, the largest asset holder in the world, signed a contract with Coinbase earlier this year to provide Bitcoin options, trading options, investment options to their industry clients. These banks are preparing by building their capacities to handle cryptocurrencies. Specifically, they're employing digital asset teams that will manage cryptocurrency when they finally adopt them. This is an impressive move. The banks have realized that cryptocurrency is not their forte, so they're preparing teams to deal with the innovation when they finally embrace it. Why are banks embracing cryptocurrency? Well, despite the shift in position regarding cryptocurrency, one wonders why banks are making this move. Generally, one would argue that banks have realized that cryptocurrency is not very different from fiat money. In fact, I would say it's better, but that's an opinion. Therefore, they are becoming more conscious that they too have a stake in the space of cryptocurrency. However, there are some particular reasons that we can point out that are pushing more banks to embrace cryptocurrency. One of them being the popularity of cryptocurrency. Today, millions of people and organizations are using cryptocurrency. For instance, the 300 million users, hundreds of thousands of transactions occur daily on the platforms, and other cryptocurrencies like Ethereum also command significant user bases. The growing popularity within the brief period is something that banks could not ignore. It makes them realize that efforts to fight it can only be futile. For example, despite the ban on cryptocurrencies in China, the Chinese government introduced the digital yuan as a replacement. And this shows why it is hard to fight this digital currency. So if you can't beat them, join them. The potential of blockchain technology. And I know a lot of crypto users today don't really know what blockchain technology could really be applied to. But that's why we grow and we learn and we get up to speed with the current productions. Banks also appreciate blockchain's technology, immense potential, which underpins cryptocurrencies. Initially, banks tried to fight them because they didn't understand blockchain technology well. They only focused on its decentralized system, which they saw as a direct threat to their existence and continued control over the financial system. That whole notion of fractional reserves comes back into play. However, as information about the potential of blockchain technology in reducing costs, making the transfer of funds faster, and enhancing security. This is the big one for blockchain. Security is the lack of a third party and security. More banks are now beginning to have a more positive attitude towards the technology. If they are to benefit from technology, then they have to embrace the cryptocurrency. In conclusion, more banks are embracing cryptocurrency and realizing its immense potential of underlying blockchain technology. Now, not only banks could benefit from this, but every sort of manufacturer that we know today could run on blockchain within 10 or 20 years. The reason for this is you can take a raw organic material all the way to an end user and track every step on the blockchain without any sort of third parties or fraudulent activities that would come up as undetectable. Now, there are still flaws, but with time, those flaws will get sealed up. In other miscellaneous news, BudBlocks, VeChain, and Holo are likely to experience massive growth in 2023. Now, like we were talking about just a moment ago, with supply chain manufacturers using blockchain to track the building, the mining of raw materials into goods, all the way into the hands of consumers, VeChain is a great example of a player who's doing this. And if you look into them, they do have quite a bit of large industry players partnered with them. Now, this says, if you're looking for cryptocurrencies with high growth and potential in 2023, BudBlocks, VeChain, Holo might be some of the best options. And again, this is never financial advice. BudBlocks, or known as Blunt, and its usage. So BudBlocks is an innovative ecosystem that aims to unite the cannabis industry and provide anyone with the opportunity to buy, sell, or invest in products and dispensaries on a global scale. Now, this could be huge as the federal government pivots and becomes more lenient with cannabis. We've already seen many states legalize cannabis in the last 7 years or so, and this seems like the perfect addition to that storm, because we all know that cannabis stocks will blast off once the Fed or the federal government announces its plans to legalize it in all 50 states, and it's only a matter of time. What's better is if you can invest in cryptocurrencies associated in these federally legal businesses. Now, the ecosystem as a whole is built on decentralized technology on ETH, the Ethereum blockchain. It aims to provide a secure marketplace that will protect personal data and provide a transparent market. The Blunt token is a virtual medium of exchange used to facilitate liquidity within the ecosystem and offers a solid solution for getting crypto payments and tracking stock. Blunt is also a requirement for the NFT marketplace. It aids users in accessing fractional ownership opportunities while also providing them with entry to the ecosystem where they can use DEX and DeFi products. And for those of you who aren't familiar with DEXs, those are decentralized exchanges like Binance or Coinbase, but without a governing body other than the users. And so people will govern it, but it's based on token holders. And that's what makes it decentralized in a manner. So nothing really like the Binances and Coinbases. Those are exchanges, but a DEX would be for more decentralized financial applications. Users can redeem rewards through staking the token, get NFT artworks for participation, and sign petitions alongside engaging with play-to-earn gaming. Any ERC20 compatible wallet or Ethereum-based wallets will also be able to store the cryptocurrency, meaning that Blunt can be stored on most of the crypto wallets available today. Within its ecosystem, there's also a Ganja Guru's NFT collection that features 10,000 unique NFTs alongside the arcade, which aims to provide retro gaming experiences and other interesting things. But all of these factors will contribute to the growth of Blunt. I've never heard of this project, but it sounds pretty interesting. I do know a few protocols that have similar models and structures, but it's not built around cannabis. And so for all my ganja lovers out there, this one might be worth looking into. VeChain and its usage. A lot of people know about VeChain, but we'll go into a brief description. VeChain is a blockchain that is utilized for developing dApps and supplying chain management. And so supply chain management. And I think that might have been a typo. It launched in 2015 and is powered by its native currency known as VET. VeChain Thor is a blockchain system powered by the proof of authority consensus mechanism, where VeChain or VET powers the network and can be used as a transfer of value. And so VeChain Thor is more of a governance token. And so we were talking about how DEXs versus centralized exchanges require some sort of governing body. Well, holders that hold VeChain Thor in this case would be able to vote on certain pivots or the roadmap of the project. VeChain has huge growth potential because it powers a protocol that uses less energy than ones that use proof of work, such as Bitcoin, and such as ETH right before we merged into proof of stake. And developers are given access to VeChain toolchain that aids development. Another one that we have never heard of, but we will hear about it together as a team, because we're all a team here, is Holo, or HOT, and its usage. This is a peer-to-peer distribution or distributed platform specializing in hosting dApps built using Holochain. This framework does not require the use of blockchain technology. Very interesting. By leveraging power of native cryptocurrency known as HOT, the network enables distributed hosting services. Anyone can loan the computational power of devices that they own, and by doing so, they earn rewards in the form of Holo fuel. This utility level is the driving force behind the increasing growth of HOT cryptocurrency. Now this, when I read that it's not using blockchain technology, I sort of stepped back and thought, whoa, what's the point? But when you read into it further, you start to realize that projects like these are an easy way to bring in native Web 2 users into Web 3. Their interfaces will be more familiar, their interfaces will be more comfortable to use, and their design will ultimately gear us for more and more adoption. So all good things, but very random news. Another random piece of news for today, or actually yesterday, is one involving Rolex for our watch lovers out there. And so Rolex enters the metaverse with crypto and NFT trademark applications. Now, the rave of a burgeoning combination of real and virtual worlds through non-fungible tokens seems to have finally caught up with the fashion world. We've seen Dolce & Gabbana, we've seen Gucci, we've seen Diesel, and many other fashion brands such as Nike, getting into Web3 in a way that would never have been expected back in 2018. Rolex becomes the latest fashion brand, filing trademark applications for registration and adoption of the so-called Metaverse. Now, according to the November 7th tweet from attorney Michael Kondudis, a patent attorney in the United States Patent Trademark Office, the luxury watchmaker, during its filing on October 31st, outlined its plans to fully engage the metaverse using NFTs, NFT marketplaces, NFT-backed media, crypto keys, virtual goods, auctions, and so much more. He said, luxury watchmaker Rolex has filed a trademark application and listed all of those things along with virtual and cryptocurrency exchange/transfer. This is huge because for anybody who expects this industry to just disappear overnight, this would be a wake-up call. Imagine hundreds, even thousands of big name players and companies are investing millions into this growing ecosystem of technology. Now, to me, that does not sound like something disappearing overnight, but rather a seed that's being watered during a bear market or a crypto winter. Keep an eye on this, as we will, and we'll keep you updated on our page. Now, to wrap things up, let's take a look at the chart and see where Bitcoin's at. And then we'll call it good for this pilot episode of the Cryptollennium News Network. As of right now, 9:20 Pacific time on November 8th, 2022, Bitcoin is trading at $18,260. Now, if we take a look at what's going on in there, we'll see where we're headed. So as we can see, we had quite the leg down yesterday, or today technically, and we closed pretty low. I think the close for the day was about 18,550 with a low of 17,114. Now, some might say this was the bottom, we bottomed out, but I wouldn't be so quick to assume that. Hopefully we did bottom out, but as you can see here, this was the last bottom in June. And if we take a look at the MACD, it's showing us that we were already in a high area of selling, whereas today's incidence is different. We see that we've reached a lower point of buying, and now the weak trend has started to gain weakness. So, to those of you who assume today might be a bottom, I sure hope so we can just begin the rest of this accumulation phase and move into the next bull market. But I'm not sure if that's actually the case, because one can only imagine if we end up becoming sold as we did over here in the summer prior to the August run, we may reach lows like the ones many people have discussed, such as 13 to 14,000. And with that said, then we could begin our accumulation phase. Even though I would advise, and this is just a disclaimer, this is a great entry for Bitcoin. But as Bitcoin dominance goes up, altcoins will continue to drain and drain and drain until the dominance has stabilized. And so that's just something to keep in mind, because right now Bitcoin dominance is a little bit low, but as we can see here, Bitcoin dominance went up quite a bit in June and then crashed. And then again, I know we can't really see it that well, but if we look at what happened in October, Bitcoin dominance bottomed out by September. And that's when everything was running up. It started running up in August. And so as we all know, as Bitcoin dominance drops, money flows into the other assets that are in the cryptocurrency ecosystem. And so from July all the way until September 2022, the beginning of September, we can see that Bitcoin dominance jumped. And what happened as we proceeded through September and into October? Yeah, we saw a couple of big pumps, but for the most part, and for many cryptocurrencies, specifically altcoins, we saw bottoms in this area versus this area. Yeah, they might have bottomed here for the year and seen their all-time lows since being offered during this previous bull run. But really, one doesn't notice how these things play out until you notice when Bitcoin dominance went up in mid-October is when many altcoins bottomed out. What this means is as Bitcoin dominance continues to climb again, we can expect to see some decline for our altcoins as the money supply balances itself out in the asset class. So a little bit of food for thought, because it does look like Bitcoin dominance is on an upswing. And so for those eager to accumulate their favorite altcoin, a little bit of patience may not hurt in the long run. Thanks for tuning in to our pilot episode of Cryptollennium. I'm your host with the most, Dr. Jedi Jed, and I'll see you guys next time.